kembali lagi bersama saya Gaby Suhartanto, Investment Connoisseur dari Moduit. Dan hari ini kita ada kedatangan dari Pak Naresh from Principal Asset Management. Hi Pak Naresh.
Hello Gaby.
Thank you so much for being here.
Pleasure, thanks for the invitation.
Yes, very excited to talk to you more about the equity market here in Indonesia. Buat teman-teman juga, jadi hari ini kita mau membahas nih tentang equity market di Indonesia, karena kita tahu banyak hal yang mungkin sekarang sedang terjadi ya di dunia, dan kira-kira insight apa sih yang bisa kita dapatkan untuk kita lebih wise dalam kita punya investment. So, what's your take about the equity market here in Indonesia, especially with a lot of what's happening in the world? There's a lot of geopolitical things happening.
So when we look at the Indonesian equity market today, so there are a couple of angles to analyzing it. One is from a domestic perspective,
right.
Another one is from a global perspective. So from a domestic perspective, Indonesia looks very, very strong, you understand now. So our economy is in good shape, inflation is under control, the corporate sectors are doing very well. So overall, I think there is a feel-good factor in the market, correct? You know, in golf, we say that we are in a sweet spot, you understand now? So I think Indonesia is in a very, very good position from all those perspectives. But from a global perspective, of course, there is so many things that is going on in the world that is adding to risk aversion, and that is what is impacting most of these markets. You know, obviously, the number one issue we are facing is the high inflation and high interest rates in US, and we thought it has already peaked and it should, cool down. But so far, the signals are it is going to be a little bit more longer. So that is adding to some risk aversion. The second one is the war in Ukraine continues to go on, and that continues to have the geopolitical overhang on the market. Mm-hmm. Now, whatever happened in the last couple of weeks in the Middle East is a very surprising negative development. It is going to add to the complexities that the market is already facing. And then in Indonesia, we are getting into the 2024 election as well. So I think this is a time where we need to be cautious. I think even though fundamentally the market is looking good, especially from a valuation perspective, once again, the market is looking very attractive. Right now, the market is trading at 13 times the earnings. Typically, Indonesian markets used to trade at 16 times multiples, and a country of Indonesia with the potential should be getting at 20 times the earnings multiples. So clearly, those upside potentials are available, but I think we need to wait for the world to stabilize a little bit more and risk appetite to come back. So that is critical to get the upside in the equity market.
Okay. And so now that we kind of have a backdrop of the equity market, there are different ways into entering that equity market, right? And one of them is through indexing or through investing in an index fund. And with Principal has the IDX30 index fund. And so I'm just curious, what actually is so great about IDX30?
So, in Indonesia, we have almost 700, 800 companies listed in the Jakarta Stock Exchange. But if you really look at the so-called blue chip in our terminology, correct? Companies that have established a good track record, they have excellent brand, excellent business model, and they have established leadership position in each of the industry. So these are called as blue chips, you understand now? So IDX30 would be the top 30 companies in the index, and so basically it is the easiest way where you can capture the entire market. Today IDX30 constitute to almost 55 to 57% of the Jakarta Composite Index with 30 companies out of 700 companies. So that means they are the biggest, the brightest, and the best available in the market, you understand now? So through IDX30 index funds, what are we trying to do? We are trying to make it easy for especially new investors and people who are not comfortable with taking high risk, high volatility. This is the best way to diversify away from fixed income and experiment investing in equity market. This is the safest solution available.